Friday, December 6, 2019, MONERO 64, home of alternative economics and contrarian views. I'll be looking at the markets this morning, see what they're doing. They seem fairly quiet. Today we've got non-farm payroll at 8:30 New York time, 1:30 p.m. London time. That will be the major event in terms of economic data for the week. The key components of this number to look at: first, average hourly earnings. That's expected at 0.3 month on month versus 0.2 the previous month. Federal Reserve keeps a close eye on that number in terms of looking at inflationary pressures, as they call it. You've got the non-farm payroll, of course, the headline number that's expected to increase by 186,000 versus 128,000 the previous month. That's a key component that the markets look at. Of course, that number is derived from a survey. It's not really an actual amount of jobs that is created, right? And then, of course, the unemployment rate, not the U6 one, but the one that doesn't count the millions upon millions of people that have given up working, the 95 million or so that are not in the labor force, right? That number is expected to stay at 3.6%. So how will the market react to this number? Well, lately, stock market has been reacting always positively, no matter what the number is. But we'll have to see. If there's a big surprise on the downside in non-farm payrolls, it could help the bond market higher, yields down. Stock market, normally you'd think, oh, that stock market will drop. But a weaker economy means that maybe the Fed's going to cut rates, right? So that would encourage people into the stock market. It's quite perverse. No matter what happens, the market goes up. But for precious metals, I would say a very weak number would probably help precious metals higher, right? So that's the main thing happening today for the markets. Before I look at the markets this morning and also talk a little bit about the situation at the Bank of England and the gold flowing out of there, what I think about that and how it could impact gold going forward. I just like to reference a book that I'm not sure I've spoken about that much in my videos. A lot of times I do videos about the books that I like, but it's this one here. Where Are the Customers' Yachts, right? Here we go. It's by Fred Schwed. It's a good hard look at Wall Street. So this is a classic. I highly recommend people who want to get involved in the markets read this. Fred Schwed was on Wall Street in the 20s, and it's a really funny book. The title, Where Are the Customers' Yachts, is because Fred Schwed knew someone that drove on a tour, maybe a bus tour down Lower Manhattan, and they saw all these yachts, right? And someone asked the tour guide, whose yachts are those? And they said, well, these are the brokers and the bankers' yachts. And someone said, where are all the customers' yachts, right? So it's just showing how Wall Street operates, and it hasn't changed since the 1920s, how they look after their own interest. The customer kind of comes second most of the time. So I highly recommend this, Where Are all the Customers' Yachts? So you have an idea of what's going on Wall Street. And this applies, of course, to the city of London as well. So, yeah, the question of the Polish gold, we now see that I think Slovakia, I think Serbia as well, taking their gold out of the Bank of England. Of course, they don't have huge amounts of gold reserves, those three countries, so it's not impacting the holdings at the Bank of England. And how can that be important for the gold market? Well, the almost 5,000 tons that the Bank of England holds 4 different countries around the world is utilized by the LBMA, which is basically the London Bullion Market Association, which, how can I say, kind of regulates the bullion banks, which are the big international banks that trade bullion. And most of it, of course, is paper. They're very big in London. It's the big center of bullion trading in the world. It's probably bigger than New York, but it includes banks from the US, banks from the UK, banks from Europe, all the big ones, all the too big to fail. And what they do with that gold at the Bank of England through the LBMA, because the Bank of England doesn't want to be directly involved. That's why they have the LBMA. Bank of England leases, let's say, 100 tons to a bullion bank, a Goldman Sachs or HSBC or a JP Morgan, and they take that and they sell 1,000 tons worth of paper gold in the market, unallocated gold. They also use the futures. They drive the price down, right? So that's the thing. If gold keeps flowing out, physical gold keeps flowing out of the Bank of England, that kind of limits the amount of short selling they can do. The pyramid at the bottom of physical gold shrinks, right? At the moment, it's still not flowing that much out. But what we have is the loss of confidence, kind of, in trusting the Bank of England. And why is that happening? Well, partly because of what happened earlier this year with Venezuela when they asked for, I think, 11 tons of gold, and the British were pushed by the Americans who were trying to engineer a coup d'etat in Venezuela. They were pushed to block that gold going to Venezuela. So a lot of countries now, they've seen this, and they're saying, what if something happens politically and they don't allow us to have our gold back? And I think that's what's going on, and I think that's why it's important to keep an eye on this activity. As regards the Bank of England, maybe even the New York Fed. The New York Fed also keeps a lot of gold for other countries. We know Germany took their gold out of the New York Fed. So it's the same, it's similar to what's going on with the dollar, right? The U.S. trying to use the dollar as a weapon for sanctions, right? Maybe they're starting to use gold as a weapon now to influence foreign policy, and that could actually hurt them, go against them, because the gold that they have at the Bank of England and the Fed helps them keep their paper currencies inflated and going, right? It keeps the dollar king, right? So they need to be very careful, in my opinion, with that. So how would that impact the price of gold going forward? It would be positive, because there would be less gold for the gold cartel, the London, New York axis to use to manipulate the price lower, right? So that's what I wanted to talk about there. So now let's look at where the markets are. It's just before 10 to 8 a.m. London, so still fairly early and fairly quiet, the markets, I would say. Here in London, we've got spot gold down about $3, 1472.70. Yeah, gold has been kind of disappointing in that it hasn't gone up towards 1500 again, but with what the stock market is doing, near all-time highs, gold still, in my opinion, has held very well. And don't forget, we've come from a 1200 handle in May, end of May, beginning of June, to a 1400 handle. So we need to keep that in perspective, of course. So the range has been 1477 to 1471 overnight. Silver down 6 cents at 1689. Range has been 1685 to 1701. The stock market yesterday was down most of the day, but it rallied towards the end of the day. It was up a very small percentage though, virtually unchanged considering we are at such elevated levels, right? Right now, the Dow futures up 52 at 27,727. S&P is up almost 6 points. So stock markets are up. Stock market indices are up about 0.2%. NASDAQ 100 futures up 0.25% at 83.30. Sterling down slightly nominally at 131.48 versus the dollar. The euro is above 11 now, so the euro is quite firm. It has firmed up. It's at 111.03, unchanged overnight though. Dollar yen also fairly stable, 108.66, and the dollar's down 0.1% versus the Chinese yuan. 703. Crude oil, WTI 58.27 and Brent 63.08. So pretty much where we were yesterday when I was talking. Let's finish off with the bond market. 10-year yield is at 180. It's unchanged. So fairly steady as well. Yields have gone up a little bit in the last few days. Today, a lot could happen because of the non-farm payroll number. So let's keep an eye on that. It will certainly move the markets, especially if the numbers are out of line or not within expectations. That's how Wall Street and the City of London works. The markets work. They have expectations for statistics. If they come out not as expected, it moves the market. If they come out as expected, it's less likely to move the markets. If you enjoyed this video, make sure you hit the like button. Please share this video far and wide. Make sure you subscribe to the channel if you haven't yet and you enjoy my videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.